Hello, traders. Welcome to this live webinar with Elite Currency. My name is Chris Svorcik, and thank you for joining this WAVE webinar. Elliott Wave Theory, Fibs, Moving Averages are our core focus of this webinar series. So in this specific episode, we're going to talk about attaching probabilities to trading ideas on this 8th of February 2021. And reason is really I have my euro dollar pound dollar videos, right? Of course, as you probably know, where I discuss my view and outlook on these two currency pairs. And not always do I have a very strong opinion necessarily. I just indicate what I think, how the patterns are looking, how the trend, of course, support and resistance, and where I think are key decision zones and what might happen at one spot. But in some situations, I'm not necessarily very confident. I might attach equal chance to two different scenarios or even three different scenarios. And I can imagine if you're looking at the video maybe for the first time, that if you're listening to that, you might think that uh, it's not sure enough, or not confident enough, or that it doesn't help in any way because you're looking for something more opinionated, more sure. So that just created, some topic for this wave webinar, which I think is important to discuss. I think that generally speaking, people who are sharing their opinion actively, either through webinars or articles or sharing their analysis, tend to maybe share their opinion more strongly, right? Because they want to catch maybe attention, show that they know it, right? Indicate that they understand it, and that therefore showing hesitation or not being certain about a certain direction could be seen as weak or unsure or indicate lack of knowledge or experience, right? So I think that if you are showing your opinion, you just kind of feel forced to be quite sure about something, generally speaking, and probably also catches the most attention from people out there, right? Because we want to find people who are sure of themselves and of the situation. Now, I sometimes have that, sometimes I don't. And it really depends on how I interpret the market and the charts. And at certain moments, I'm pretty sure. In certain markets, I'm very sure. In other moments, I'm not sure. I honestly indicate my level of confidence, as the market develops and the charts change. And that's not always very confident. As I gladly indicate, I'm not always sure. I think that that is the right way of doing it, because I don't think that anyone can be equally sure about what's going to happen in the markets and charts at every single point of the way. And I think that claiming to do so is often enough exaggerated, right? So I think that no one can really, know the market that well. All of it is anyhow a probability, even if you're pretty sure it's not 100% thing. And no one knows what the market is going to do every single step of the way at every single moment, right? It's just not, we don't have that kind of capabilities. We can assess it as best as we can and come close to maybe being certain, but never to 100% degree. All right. Let me close this and start the charts instead. Oh, wait. Before I do that, though, that was a quick introduction about why I think being overconfident is not a good way for trading. It might be good for creating content, but I don't think it's really matching reality. All right, in my view. So that's a quick introduction. But before we continue, I wanted to let you know a special sponsorship from our partner broker here. Monfax broker is looking to help traders, and they gave the sponsorship deal to anyone from these countries for ECS Live for free for 6 months entirely, or a discount on DZA. So that's great from them. Want to let you know that they are sponsoring this webinar and making it happen. All right. Let's take a look now at the charts. So there's nothing wrong with being confident in a certain outlook. There's nothing wrong with being confident in a certain analysis. Don't get me wrong. I am also at times quite confident about certain things. Sometimes I'm right, sometimes I'm wrong. But if you're all the time super confident about something, I think that you either are trying to sell something maybe, or just don't have that experience yet. That in trading, you're kind of like new to trading, and you think that you know it all, right? Or something like that. Because obviously there are just situations where the market is not that clear, right? And I think it's okay to accept that and be okay with that. Be okay with accepting that it's not as certain as we would like it to be, and just wait, right? That's one of the advantages of being a retail trader, is that we have the option to trade if we want, and we can also choose not to trade. Not trading is a very valuable, let's say, tactic, right? Approach, waiting for the setups that we believe have the best odds and filtering those that are weaker. Because even the ones that have, the best odds, let's say, in our eyes, there are going to be losses with them too. They're going to be trades that don't work out. So focusing on the trades that have the better odds makes sense because we have the most conviction. That's good. We need to have some bias so that we stay in a trade, because if we self-doubt any trades right away, we'll be closing and entering in and out too many times without giving the trade the time to survive. But we got to balance that, throughout the day and the week and the month, and really focus on setups that have the best odds, and not be overly confident about stuff that we shouldn't be overly confident, in my view, right? Um, that's just my 2 cents. Um, Let me know if that makes sense, and how you see it. But yeah, that's why I generally, if I'm not sure, I just indicate the best, let's say the most likely scenario, with some alternatives, um, decision zones where I think it could be interesting if price does that or that. So I give a lot of scenarios. Not everyone is going to be that interested in that, because they want to maybe know what is happening right here, right now, or what will happen right here, right now. But that's personally not my style. That's not how I see the charts. And yeah, that's not how personally I think it's, I don't think it's the best way to approach it. Um, Attaching probabilities to a setup, of course, is an estimate, unless you are using a specific rules-based system that could be back tested and forward tested and sample tested and in versus out tested. Of course, then you can have a lot of data created on rules-based strategies. But if you're just, trading discretionarily, of course, then attaching a probability is something that a trader estimates based on their experience, knowledge, and analysis, right? And of course, that could be wrong. And as you go along, you adjust that, and you probably get better with more experience in making those judgments, right? Uh, Attaching probability to a setup in general is a tricky thing. We have a lot of biases. We are not used to thinking about probabilities in general. That's why I think that, generally speaking, a lot of traders are looking for such a strong opinionated voice, because we're not really used to hearing probabilities. I don't think that it's not something I mean, we are confronted with it when we look at the weather, but it's not something we are really used to. And trading, I think, is really a lot about probabilities, um, but it's difficult to process. I think that a lot of what I read, at least, is that humans, and I think traders in general, probably overreact to something that's a small chance and underestimate, like say there's a one millionth chance that a meteorite will hit, the Earth or something like that, then I mean, people in general kind of overreact to big impact things that have a small probability, but underreact maybe to something that could happen quite likely. So, for instance, the 30% chance of rain. If it does rain, people are shocked. But yeah, 30% chance is quite substantial. So, 1 out of 3 days is going to rain. So, it's not that surprising if it's going to rain, right? So, difficult. People are, generally quite bad with probabilities. Attaching probabilities to charts is even, I guess, it's quite tricky. Um, it doesn't have to be that precise, of course. It's just when we're trading discretionary, it's anyhow kind of an estimate whether we want to trade something or not. Uh, for me, candlesticks and candlestick patterns, very important piece of the puzzle, of course. Price swings, um, whether impulsive or corrective. Um, the multiple time frames analysis, of course, right? So depends. Sometimes, in some cases, one time frame will be more important than the others, right? Um, but using multiple time frame analysis certainly helps get the bigger picture or the smaller picture, whatever helps. With today's situation, I was actually inclined to use the 1 hour chart because it gave me a clear indication of a potential 1, 2, 3, 4, 5 pattern to the upside. So each time frame will be important at one moment or another. In this case, 1 hour chart, but maybe tomorrow a daily chart could be more important as it shows the daily candle. For instance, a bullish engulfing twin. So price swings, supportive resistance, trend, patterns, of course, are all important aspects to understand that. And price patterns, of course, there are many underlying patterns, chart divergence, time wave patterns are very important to understand how the market moves. Market is fractal of nature, so it repeats on all time frames. And moving averages help understand if prices are moving away from the average or going back to the average, right? Is it escaping gravity or going back to gravity? So all this information kind of helps you assess the probability of that point. Understanding where the decision zones, if there are any particular confirmations of price at those decisions, using triggers to find good entries, of course. So with all that, that's a very quick summary of all the kind of tools that I use in my SWAT course, right? Very, very quick summary, right? Like 3-minute summary. But of course, my course dives into all of that in more detail. But basically, the chart, all in all, the technicals in chart is basically the roadmap for understanding the path of price. And the price is always going to choose the path of least resistance. So what we see now was the path of least resistance, and it will follow the path of least resistance. So if it's testing a resistance level, is it easier to bounce or to break? Right? Depends on the situation. Depends on the context and all the things I just mentioned, patterns, trends, and stuff like that. But the chart is really the roadmap. And by using all the factors I just mentioned, I can understand that roadmap better. And then I can understand the probabilities of those patterns playing out and how new information can change those probabilities, right? In some cases, information is going to confirm what I think. In other cases, information is going to decrease the probability of a pattern playing out. Just because we have a certain assessment of the current situation right here, right now, doesn't mean that assessment will stay the same, right? As new information comes in, that could change. We want to be adaptive to that new information. We want to, I think, as a trader, you want to be ready and open to new information. But as a trader, I don't think you want to change your opinion too fast either. It has to be well balanced and well weighed so that we don't overreact too quickly to new information, but don't underreact to new information too slowly either. All right. So find that balance. Difficult because one of our biases is actually to overreact or underreact. Okay. Now, these patterns in the path of least resistance can change. That's why we don't have 100% track records typically, right? You might have very long winning streaks, but there are going to be losses because, you know, market changes, the patterns change, and but look good just changes, and that those things can happen. And yeah, even if the pattern is looking correct, is working fine, uh, these patterns can fail, these patterns can change. So identifying it is one thing, trading it is the next, and if it works out, it's always a probability, even if it looks really really good, because of that the fact that yeah the path of least resistance can change. So there's a sweet spot when it's good to enter. There's of course traders can enter early against the momentum and flow, anticipating a change of direction, or they can wait for a confirmation. And there's often a sweet spot where there's a confirmation, but price hasn't confirmed too much and hasn't moved too far away from, let's say, the decision zone, right? Because let's say that you take a short here. That's early. Let's say the confirmation is here, a little bit lower. And let's say you decide to short it all the way here. Now that's too late, right? That's chasing it. So there's a sweet spot where, I mean, there's all kind of trades possible: early, sweet spot, late. But if you're looking at it from a maybe probability point of view, there's a sweet spot where the probability is on your side, and you're not too late and not too early. Let's say those are typically the best trades with the best probabilities, in my view. All right. And of course, using invalidation and confirmation levels to put boundaries, what you expect from the path of least resistance in terms of time and price levels, is useful. All right. So maybe some practical examples. Let's see. For instance, here as price was getting up into 123, I was quite confident that there would be a retracement down. You know, at the least, I'm not sure what kind. I would say at least to 120, and that happened indeed. That's where I was quite confident. But for instance, second example here. Let's see. I was quite confident with this bearish candle and this breakout that price would move down, but only to the previous bottom. After that, I wasn't sure if we might get a reaction and how strong reaction. I thought at least towards this resistance trend line, and I thought that could again be a bouncing spot. All right, I'm not doing this after the fact. I actually all of this or most of this was discussed in my euro dollar pound dollar videos. All right, so pre-fact. So yeah, I was indicating that there could be a bounce here, that there could be a move up back to the fibs, or at least the resistance trend line, right? So wasn't I liked these bearish bounces, but I wasn't sure how far it would go and if we would get necessarily a lower low. Then we got the bounce at the trend line. I think that the first two had very clear bearish candles. The third one, not really. So maybe this would have had to be the kind of clear reaction to the trend line. Although there was, or this bearish candle right at the trend line, for instance. So I would say that as price was getting closer to the previous bottom, I was less sure about what was going on, right? Because I was quite sure in these four red lines that price was heading lower. Wasn't sure if it would break for a lower low right away at that moment. But let's take away these lines now. As price was getting closer to the previous bottom, I was less sure in this area because there was a chance that price could break or bounce. I was really open to both directions at that moment. So yeah, it's basically nothing wrong with being neutral at that point, right? And we did get a bounce despite the whole thing looking bearish. Now, then I shifted gears as it approached the third time. I started to become more bearish because to me the pattern was shifting to become more of a descending wedge. And although I could see a small bounce, I thought eventually it would break. So my confidence was moderately confident that there would be a bearish break. So that's how the confidence kind of intervals shift. Here, also quite confident there would be a pullback and continuation, which happened. But here I was quite confident that we would get a continuation lower, a little bit lower at least, with a wave 4 bear flag, and it dropped down to 118.70. That didn't happen. So here you can see I was fairly confident, but incorrect. It didn't happen. We didn't get the flag, and we certainly didn't get a continuation. That seems to be the end of the wave C. So I'm sharing kind of openly things I discussed in my Euro Dollar Pound Dollar video, moments where I was sure and correct, moments where I was quite sure and incorrect, and moments where I was not sure, had a hunch and either played out or not, or hunch had a let's say a favorite for a certain scenario and it either played out or not, right? So yeah, there's nothing wrong with being less certain about certain moments, in my view, and accepting that, and actually using that not to trade, and waiting for the moments where certainty seems more likely, and focusing on those. So that's why I share the moments that I'm not certain. That's why I always make videos on the same days, mostly Mondays and Wednesdays. And I just give my update. Sometimes I'm not sure. I don't make videos only when I'm sure, or only when it's very likely, right? I just continuously provide my view about those probabilities and how I see the charts. And yeah, I understand that some, just think that that's maybe not firm enough, let's say, or confident enough. But yeah, that's just, I have a different vision. I am just sharing my view of it as we go along, and that changes, and the confidence level too. So I'm not shy in saying that I'm not confident, you know. Of course, if there's a video where I'm not confident, it might not be as useful. I don't know. It's maybe very probable, but I'm not going to pretend to be confident about something that I don't feel confident about, right? So yeah, Matera is commenting that he likes the SWAT course. I'm very happy to hear that. Great stuff. Thank you so much for sharing. And he's saying that he's slowly but finally growing up. That's a funny way of putting it, but yeah, indeed, of course, trading is a cycle, and Yeah, it's all about progressing, learning, getting better indeed. And he has an interesting quote here saying, "Give me some more months, and I'll share my stats publicly." That sounds very exciting. So yeah, can't wait for that. So great stuff. Yeah. So if you want to follow in Matero's foot tracks, sorry, and learn more about SWAT, you can do that either through a sponsorship from one of our brokers or become a paying member, of course, as well as possible. Let's give some situations maybe still. Let's see if I can find, these are the most recent kind of moments. Oh yeah, this week I was quite confident about upside because I thought 1, 2, 3, 4, 5, and we did get a higher high, and there was a bull flag pattern, right? So I think that I did have a higher target in mind, 121. Let's see if price gets there, but the minimum, let's say, of a higher high has been reached. Any other moments? Let's see. Here we had an A, B, C, D, E triangle. I was quite confident about that. But let me find moments maybe where I was less confident because I'm talking also about that. Let me think for a second. They're certainly there. Just thinking about another example. Well, I think that just generally like these candles over here, right? It is a fib, but I would have expected price to go deeper. Let's put the fib from here to here, and probably would have expected more to 61.8 and minus 61.8. So at this section, I would not be necessarily confident about a bounce, and more looking for a small push higher. With wouldn't be that confident in either direction, but it probably would lean slightly towards a continuation higher until we got that strong price action to the downside that would shift the confidence to the other side. At this point, I would not be that confident about either wave, for instance, right? Whereas maybe with this price action here, I would be more confident that the wave B is finished and wave C to the upside has started, for instance. Also here, it's quite an aggressive pullback in this section, so I would definitely not be as confident about the downside. I was looking more like a wave 1, 2, 3, 4, but with such a strong price action, I would be very less confident. That would change when we see bearish price action kicking in, especially these 2 or 3 bearish candles. Confidence would go up that the downside is back in play. I cannot find any. Yeah, that's about it. I mean, in recent price action, I don't want to go back too much. To be honest, my ability to recall what I thought, how confident I was, what I expected, and how it happened is fading. My memory is not what it used to be. Of course, it's a little bit more clear in the most recent weeks. But I hope this helped in some ways. Help attach some probabilities. Of course, I use the moving averages, fractals, whiz to attach, to make more confident about certain things. So let's take a look on the hourly chart here. So yeah, this, for instance, looks like a wave 1, 2, and a wave 3. This wave 3 is quite lengthy compared to the wave 1. That's typical for wave 3. So that certainly helps. And it reached the minus 161.8 target. So, of course, that helps me be more confident that this is a wave 3, right? And as price then breaks for a lower low and makes divergence, that makes it easier to be more confident that there is a divergence pattern playing out and the wave 5 is ended, right? And this falling wedge too. So tying together all these charts, technicals, waves, using fibs, moving averages, fractals, uh, makes it easier for me to assess what is the likelihood of what wave playing out. So yeah, the length of wave 3, divergence, of course, internal waves within wave 1 and 5, if they and 3, if they have 5 waves, of course, that helps identify an impulsive wave. Um, and that just gives more kind of assessment whether a particular wave is playing out, right? Obviously the bearish reaction here at the deep fibs, very probable for wave 2. The wave 4 typically ends at the 144 EMA, so that helps. All right. Internal waves 2 and 4 typically end up at the 21 EMA here. So here and all this, typical for wave 2 and wave 4 patterns. So yeah, the position of price versus the moving averages, how far they go towards, or what kind of fibs they reach, whiz levels, divergence patterns, chart patterns in general, all help assess the likelihood of particular analysis playing out and maybe the trade playing out if one decides to trade that analysis. And yeah, the probabilities also help us assess the waves itself, right? So yeah, that's it for today. Then we'll be back 2 weeks from now with more wave topics. And if you have any particular topics in mind, feel free to reach out and let us know. Cheers. Bye bye.